Hi, welcome to another session of our Ask Me Anything, brought to you by of Financial Literacy, and a program that is free and unbiased that offers you training programs and workshops, a collaboration between Money Sense, Singapore National Financial Program, as well as Singapore Polytechnic Enterprise, right? So because it is more educational and information in nature, whatever that we are sharing today, right? Any examples or name listed is purely for illustration. Should you need any financial consultation or questions or investment queries, do approach a financial advisor, licensed financial advisor, right? So today we're going to talk about something very, very interesting. We're going to talk about financial fitness and basics of money management. That question itself will bring to you a couple of things, okay? One is you will ask, what do you mean by financial fitness? How do I know whether I'm financially fit? And what kind of measures can I use, or some checks that I can do? And what if about emergency? So much talks about getting ready, some funds, 6 times of my monthly expenses. What is it all about? How do I then build a strong financial foundation for my future? And today we are talking about your money and my money, right? So that's so important, isn't it? So do I have enough protection in the event of emergency? But before we could explore all these questions, let's do a poll. Very quickly, my colleague will launch it in the Facebook, the following question. For emergency, do you have at least 6 months of monthly expenses saved up? 2 options. One is yes or no. Right? Think about it. Right? Do some stock taking for the time being. Let me just briefly elaborate what are we talking about here in terms of emergency. Here again, in the times of crisis, when there's something that happens, then we need some money to tie us over the period of time till we settle down. We could then resolve the issues and then start employment, perhaps if we lose our job, or start to bring in the income where we need to, right? So with that, right, again, we needed some funds to be set aside for that purpose. And that fund has to be something that's liquid. We could activate it anytime, could use it to meet our expenses and our needs for the time being. Some experts say 6 months, right? Some experts would agree that no, it takes about 6 months, but it really depends on the industry that you're in, and we will elaborate later, right, more on this. And I see the answers as the response has come in already, 100%. Well done, everyone. So give yourself a pat on the shoulder and say, good job. 6 months we have, and that's wonderful. Right, so let's bring us into the topic about what is financial fitness. All right, financial fitness, briefly defined as feeling good and confident about your financial condition and being able to manage money to meet my current, and not just current, but my future needs. And financial fitness is just like a body. When you feel healthy, when you feel fit, blood are flowing, muscles are growing, and you are feeling really, very able, have all the energy to meet the day's challenge. And that is something like what it is like in financial fitness. And following are some ratios that I could share with you that you could look at and use them or for self-assessment. First one, basic liquidity ratios. Okay, here we are talking about cash and cash equivalents divided by monthly expenses. And we are here again 6 times. Remember the question we started for the poll was 6 times of your monthly expenses. So there it is in sync, 6 times. And then we talk about also saving ratios. Saving ratio here, we refer to monthly saving divided by monthly take-home income. Monthly take-home income excludes CPF contribution. So these are liquidable money that is you could activate anytime. But then again, for saving, to build up the reserve, we encourage you to set aside at least 10%. Non-mortgage debt servicing ratio refers to all debt servicing every month, excluding property-related payment, right? So if you're talking about property loan, it's excluded here. So total non-mortgage loan repayment divided by take-home pay, right? Take-home pay here excludes CPF because you can't use your CPF to pay your overdraft, am I right? So 15% of that. Mortgage debt servicing ratio here refers to monthly mortgage repayment, that is property related, and then divided by gross income, monthly gross income. Again, we can consider when, if approved, we can use our CPF to pay for our monthly installment, am I right? If that's the case, then we are talking about 30% of our monthly gross income. After you measure all this, you could roughly know exactly, where your financial position is. And to put everything together to form up a plan, there are three pillars or components, I would say, that could help to formulate a financial plan to help yourself take control of your financial position. They are namely saving, managing your resources, meaning you build up the resources to be able to then form the base for the subsequent pillars that you are looking at. Protect is like life is uncertain, and that is a certainty, meaning life is uncertain. And because of that, we need to have set in place certain protection like insurance, some form of scheme that we could participate, like CPF scheme, whereby we could then fall back on due to health reasons, due to life protection, and for our love and dependence well-being, right? So therefore, protection itself help to address that. And we have to look into that when you're doing the planning. And then finally, investment. When you have built the resources, you have the protection in place, then you'll be looking at growing your net worth, where your resources you put into places whereby you have a goal of an investment goal, whereby you employ certain strategy to put those resources to perhaps leverage on the effect of compounding to grow it. So essentially, all these three put together will help you to then formulate a more complete financial plan. And one way of doing a financial health check is by visiting the website My Money Sense. If you look at my cursor now, right, this is the website address. Just key in that and then look for financial health check. The whole process takes about 5 minutes of your time. Whatever the information that you use for the analysis just now, for the ratios, it could well be reused again over here. And then you key in and then we will give you some results. In fact, they'll give you an observation of whatever you have input concerning your personal data or financial data. It's anonymous, you remain anonymous, right? And then besides that, they also give you some recommendations concerning based on the data that you're provided. Right. So, and once you have done that, and the other aspect of financial fitness is to also look at keeping your money safe. Now, keeping the money safe is very important. Why? Because you want to make sure that whatever you're building on, reserve, protection, and investment, it's also being well taken care and looked after. And this is where we are referring to scam, online frauds and stuff like that, that you'll be very careful and not be so-called put your money into jeopardy. Here we talk about tracking and reconciling your banking transactions to identify unauthorized withdrawal in case, for whatever reason, your transaction token somehow got out and some stranger starting to do some withdrawal. And that makes it much easier nowadays because of the online banking transactions, whereby with that, right, you can actually access to your account quite readily at any time. And then do some reconciliation on the statement and see if there's any suspicious transaction or unauthorized transactions that you could then validate and verify further. And beyond that, please also take care of your personal information, particularly so when people, strangers or people that identify themselves as some authorities or some corporations that ask for your information, right, over the phone. right? And when since you are not sure about the source and also the person represented, it could be an impersonation. So what you do is that you go to point four, which is ask, check, and confirm. You make sure that you are able, call back, perhaps if you say that it's from IFL, please call IFL and verify that there is a person that is inquiring on your personal information, right? And you ask and you check and you confirm, right? Do not in any way disclose your login credentials or even OTP to any individuals. This is to protect yourself. Some good measures that you help to protect your own money. Ask, check, and confirm can also be used to validate perhaps some investment scheme that you are not sure that is promising too high a return that you're wondering is too good to be true. And if it's too good to be true, very likely so. So what you do is that you do a ask, check, and confirm. You ask the person, how did they generate the income to pay you that kind of returns? And then you check and then validate and confirm that, with the company or with the industry, people that's close to the industry, or even call up certain statutory board that is related to that and then verify and confirm. So these are the few things that we could do to help ourselves to safeguard our money against any scam. And here I would like to just rest for a while and let all this information sink in, right? It's so important, right? To let it sink in. And then when we're all ready, we're going to start with our Q&A session, which is the highlight for tonight, isn't it? Right? So with that, can I also show you the next slide, which will point you to the place where you could input your questions, all right? Onto the left of the slide would be our Facebook, right? So that's where you can input your comment and you will be reflected in the Slido later, okay? And we will also flash it on the screen that you're looking at now with my help, my colleague. Right, so on the right itself, it will be the Slido QR code. Right, so once you scan in that, you'll bring you to the platform and feel free to put in your questions. It will take the next moment until perhaps near to 8:30 or so by addressing some of these questions. But be rest assured, I'll point you to places whereby we have touch points with you to address those questions that is beyond the time that we could not answer them. And we will then put into those platforms to touch base with each other. All right. So take a moment, scan in the QR code. All right. Access our Facebook, and at the same time like it, right, and follow us. Yeah. And then when another few more minutes, right, we will bring on my colleague Bernd. Will then bring on the Slido screen so that we can go through the questions together. So take a moment. Wonderful, great. Okay, thank you, Ben. Thank you for the help. Right, ladies and gentlemen, question number 1. Okay, come from anonymous friend of ours. Okay, says, I just started my first job out of school. Should I start investing now? How much to invest? I think that's a very good question and valid question. The reason why is that it has to start somewhere, right, in terms of investment. But in my opinion, I think I would like to fall back on what I shared earlier on the 3 pillars or the 3 components. Start building up your reserve by saving up. Start considering the protection in place so that in any event, any uncertainties, that will help you to cushion against such incidents. And then finally, when you're all ready, start to invest. The orders is important. Why? Because one builds the foundation, the other one builds the cushion, the protection, the other one grow the money. So if you ask me, if I were to start off the first job out of school, I will start building my reserve, right? And then when I'm all ready, if I think that, I have the reserve that could spare, that I can absorb the fluctuation or the losses to some extent, what I could, endure, I will use the word, then I'll probably consider investment rather than sticking everything out and then losing everything, my reserve gone and my protection is jeopardized, right? So I hope I answered that question. Next, can share some of your best and worst financial decision. Hope to learn from you. Thank you very much. It's a pleasure to share. My best decision, I think one of my best decision was to have considered when I got married with my wife, and then considered buying a private property. It was quite a number of years ago. And we were innocent. I mean, we were just saving up and trying to buy a property. And then when we bought it, the time the market was slump. I mean, people was like, oh, staying away from the property. And we thought, since we just started off in our marriage life, and then we invested in that. And over time, it has grown quite a fair bit, quite a fair bit. So I think that is my best financial decision, to be able to put my money at a point of time idling into something that helped me to grow and have the discipline to contribute in paying off the loan. Of course, end of the day, it's not a very big loan as compared to now what the prices are now. My worst financial decision is basically to put my money aside and not doing anything. A procrastination for me is the opportunity loss, because they over time that people are telling me, the market is going up in terms of stocks, and in terms of if you put it into your ETF, you would have ride the wave. But I guess that is something that on hindsight, I think that I made not a good decision on that. But if things have turned out the other way around, I could be glad and say that I'm safe. But again, I would consider that as my worst financial decision. Right, next, in cash flow statement, how do I account for saving? Is it not an expense, but it is an outflow, yet the money is considered an asset? I think this portion, right, I would like to look at it separately. I would like to segregate it between corporate and personal. Reason being like that, as follow. Okay. Now, when I put a saving, even for accounting, if you put an outflow in a statement, cash flow statement, that outflow has to be accounted for in the balance sheet. Am I right? And that balance sheet goes into your assets. So if I would consider saving, it becomes my reserve. When I put it aside, it reduces my amount that I could allocate for my expenses. All right. And that helps me to build up my resources. And in that matter is adding value to me. So I thought that is a plus point. Is it not an expenses? If it is an outflow, certainly not. The nature is an outflow, certainly yes. But expenses refers to money that I spend on in exchange for some value. But in this case, I'm preserving it and building up my resources. So I hope I answered that question. So some people say we should have more than 6 months in emergency saving during COVID. Some say 3 years. Just to be sure, who is right? I think that's a very valid question. All right, survey last year done by one of the local bank, somewhere in May last year, and the finding was as follow. All right, for the people that the sample that are collected, 2 out of 3 do not have 6 months saving to tie over emergency setting. So in this case, it's very worrisome, right? But I guess with the response just now from the poll, I can see that a lot of us have. And that is an encouraging thing. We all learn from it. We know where we manage to build on it, and then have that 6 months emergency. And why 6 months? The logic is as follows, general logic. Okay, if today I lose my job, all right, and I need to go out and look for a job, I need to engage headhunters, put myself out there and know that I'm looking for a job. All right, and finally somebody shortlisted me, or I shortlisted someone, and then we meet together, interview, go through the terms and conditions, and finally agree with each other, and we sign on the offer letter. Once we sign on that, there will be a designated date to start work. Am I right? And normally it takes about 3 to 6 months. Of course, now some industries are enjoying some growth. The other industry perhaps are facing some challenges. So I would put it this way. I would say that it really depends on which industry you're in. So if you think that the industry is generally do have challenges, build up as much reserve as possible. 6 months is just a guide, at least a minimum to start off with. Some speakers, some talks that I go to, the speaker encourages 12 months. In this case, some say 3 years. Why not? If you could do that, but be very mindful that as you set aside this emergency fund, it's going to strain your expenses in your cash flow. So you got to balance that. Okay, you got to balance that. How much insurance should I have? I think that's very much a question that depends on the setting, right? Generally, insurance can be divided into three portions. One is general, healthcare, and life. Now, what are they? In brief, right? If let's say if it's life, if it happened that I expire, accident due to the accident or whatever reason, all right, and then there are dependents, right, that needs me to provide the support. So that is a quantifiable kind of financial impact, as well as some of the remaining loans that I would have and all this. So I will quantify it. And then that will form a rough idea exactly how much I will need for insurance as for a start. Of course, for healthcare, then you look at what kind of care do you need? Do you need a maid? Do you need a dedicated nurse? Or what kind of ward are we looking at? What kind of, if let's say if I lose my job now, I'm self-employed, and then is there an income flow that I can enjoy for the time being till I recover and manage to start work again? So all these are something that you probably could do some estimation, certainly, but could quantify and then form the basis for you to decide what is the investment insurance amount that you'll be looking at. And one tool that you can use actually is insurance estimator. You can find that in CPF website, right? Go to others and then look down and to the estimators, right? Look for estimators and then scroll all the way to the bottom. There will be a insurance estimator, and you can use that. Quite extensive, the question, the things that they ask, right? So that, you help you to give you an estimate. So I hope that answered that question. Next, why is it important to assess my financial fitness? How often should I assess it? Very important question. It is important. Why? Because if you do not know where you are and where are you going, then it is of concern, because then you leave it to chances. You couldn't manage your resources as it is. I have $1, I spend $1. I have $1, I spend $1. And in financial term, right, this is generally classified as $1 is one paycheck from disaster. And if that dollar didn't come in, I already inherited or should I say, I built the habit of spending that $1, or I have already gone into some commitment for spending that $1. And that income of $1 fails to come in, I'll be in jeopardy. So therefore, it is very important through financial fitness to understand exactly where you are and then manage your financial, the money better, so that it form a financial goal to reach that financial that you plan ahead. If it is of concern, retirement is of concern, plan it. If it is buying a house or even getting married, raising children, all these are that's incurred financial obligations, right? Well, have that as a goal, set against and then build towards it, and then make sure the financial fit for all those situations. How often should I do it? As often as possible, possibly more in depth at the pivoting point of your life when you're making big decisions, all right? Think about it, do a more in-depth, about regularly, at least once a year, twice a year, on a more moderate scale, but more in-depth when there is certain phase of your life or pivoting points of your life, yeah? So I hope that answers this question. Now next, where should I invest my emergency saving funds? Bank deposit, pay close to nothing. Okay, now I think let's look at the name itself, emergency saving fund. Now itself implies that this fund has to be something that's highly liquid, something that you can call upon it anytime in case of emergency, right? So therefore, if you were to invest it, well, keeping it idling may not be the best choice, but certainly if anything that can give me a return, but yet at the same time maintain its liquidity status, position, then I would consider. But other than that, if it requires me to tie it down for, let's say, 3 months, 6 months, a year, or beyond that, or something that I could not divest or liquidate and get the cash out, is something that I would not consider. Notwithstanding, I may be earning less. Why? Because that's for emergency saving, for emergency situation, right? So the next question, all right, is there a rule of thumb on how much to save and spend? I think that that will then lead to the question of budgeting. If you do a budget, right? How much is my income? And then if you have a goal, something that you can work towards, financial goal that you're working towards, right? Have that worked out, right? A plan to how much you're going to set aside. That could be a good place to start off with, and set that as a saving. But of course, test that saving amount. Make sure that it's realistic and achievable. Realistic and achievable meaning you will not, you earn $1 and then you save $1. I mean, that's almost impossible for some of us, if not most of us, right? So therefore, I have something that you could manage, right? Have that saving, and then make sure that remaining amount, right, you spend within your means. Spend within your means. Then you could then balance them both by doing a budgeting. Okay, right. So thank you for the question. Next, I am nearing retirement. How do I know I'm financially ready? Now, I think that's a good question, right? Retirement is something that all of us will one day be at, right? So retirement, it really depends on what kind of lifestyle you're looking at. So some people prefer a simple lifestyle, some prefer certain enjoyment, certain lifestyles. So if you could quantify it and ask yourself what exactly you're looking out when you retire, what are the things that you would expect or would look forward to when you retire, then you then try to assess the financial costs or that incurs that could come with it. And then with that, right, then you measure against yourself and ask yourself at this juncture, how far am I? Now, we got to be very realistic with this. But if, let's say, if I'm nearing retirement and I realize that actually it's quite far from what I think, I could afford, then make some adjustment. Perhaps lower a certain expectation in terms of your retirement and then try to close the gap. Yeah. So like what I said, it's never too late to start on it. It's better to be late than never, right? The best time to plant a tree is 7 years ago for durian tree. The best time of planting a durian tree is today, right? So if you ask the question, I would say start today, do something about it, all right? Okay. All right, next question. Thank you very much for that beautiful question, right? The next one will be some insurance premium increase with age. I may not be able to, give me a moment. I may not be able to, okay, I can see it now. Okay, I may not be able to afford them down the road and therefore may have to surrender them. How can I avoid this? Of course, end of the day, I think it's very important to do your budgeting. Every time when you are buying insurance, consider this, okay? It's better to have some than none, some form of protection. Even though just now when you talk about assessing the amount of money that you probably would be required for financial impact to cushion that as a protection for start, that itself will attract a premium. And when that premium is too high, again, measured against your budget, there's something you couldn't afford, then I would rather scale back on the coverage, the amount, and then lower the premium. So it's better to have some cover than none, right? So I would approach it that way. I'm not sure what you think. I hope that provides you some options to consider. Yes. The next question says that you share about your best financial decision. So is buying a property now a good way of investing? Well, it really depends on how you look at it. Like what you've about, if it is one of the options that people consider, but it's not the only option. And I would think that a property itself, right, primarily to me is a shelter overhead. And if I manage to have some capital appreciation, and I would clap and then be happy about it. But can I then sell my house immediately and enjoy the returns? No. Why? Because I still need a shelter unless I downsize, right? So to me, it's perhaps when the time comes when I retire, I will probably downsize and then cash out a bit of the money to also supplement my retirement sum that already been built up. So buying a property is not the only way. You can consider other options, like for example, if you could put it into some form of Singapore saving bonds, 10 years, the kind of whereby it really depends on your risk appetite and your investment horizon, and also your investment goal, what you intend to, and something that you would like to be able to manage. Property entails big tickets, I would call it big amount. So if that's the case, then payment-wise, likewise, it drags longer. And then you probably carry a loan for a certain period of time, right? Something to think about. Yeah. So term, okay, term versus life versus endowment. What are the difference? Okay. Now life, generally terms, all right? Okay, let me just tear them apart and try to explain this. Okay. Term insurance essentially refers to a certain period of time. That means you could cover yourself for like 10 years, 20 years. There is a definite period of coverage, right? And the amount, the kind of condition of coverage I will not touch on because it could well mimic, it could well also mirror in life and endowment. But peculiar to term is this, because there is no cash value. So if I were to sell, if I were to cancel it, in endowment, you call it surrender, right? If I cancel it, I get nothing back. And upon expiration of the term insurance, I get nothing back. And because of this feature, right, and therefore, the premium itself is more relatively more affordable as compared to the other two. Okay. So life, what is life? Now, life is, it covers a person for life instead of just for some period of time like term, right? So again, the terms of the condition of coverage really depends on your policy. What is interesting here is that there's no expiration date. There is a cash value to it. All right. So in any point of times, if you decided to surrender it and say, okay, I've enough, I want to cash out, there is a value. But of course, how much, that is something to then depends on the policy and what is the amount that is that it attracts. Okay. So that's for life, and compared to terms, of course, premium is higher. For life, one more thing to add is normally people may go for life for retirement. So when I reach a certain age, right, my children are all grown up and my financial obligation are lesser, something that I can well manage with whatever I have, then people say that no, there's no reason for me to continue my life insurance as that. Or so they scale back, or they could just give it, surrender it to cash it out, right, for their retirement, right? So that's one consideration that one could an option. But the other one is an endowment. What is an endowment? Now, endowment is something like term, right? Except it has a built-in of like a saving, whereby when you contribute a certain part of the there is a cash value at a different point of time when you surrender it, right? There is a cash value that you can take back. And on top of that, there is also a so-called projected non-guaranteed amount, bonuses. Very much depends on what the insurance company, where they're performing. If they perform and then, based on the policy, they can declare some bonuses. And when they declare it, okay, it adds on to your cash value so that when you surrender it or on expiration date, all right, you can then take the sum that is confirmed, guaranteed to you. Otherwise, the cash value is there. Whatever is non-guaranteed, you will not get it until it's declared. All right. And of course, if you compare to terms, endowments premium is higher. Right. So these are generally. I encourage you to approach a licensed financial advisor to understand more of the features so that you could see whether they meet your needs. Otherwise, you can sign up, with IFL courses or more in-depth deep dive into some of the insurance, how do you approach insurance and see your needs, all right? So I hope that answers your question. It's supposed to be a short question, and I hope I'm not giving you too much information. Okay, next, I am turning 55 soon, okay? That's where you're going to get your CPF amount, right? So do you recommend to top up my CPF saving to enhance some? In my opinion, all right, CPF Life is a good way, or it's somewhat like annuity. whereby okay, for the benefit of those who may be not very not new is new to CPF Life, right? So essentially, right, at 55 years old, there will be a retirement account set up at 55 for all of us Singapore citizens. When that is set up, right, amount from our special account, right, if there's not enough from the ordinary account, of the amount of the full retirement sum, okay, full retirement sum will be set aside into that account, okay, and then with that, right, it will stay there until close to 65 years old, whereby when CPF Life kicks in, that's where you get paid every month, right, as a form of payment until the person pass on. So if you ask me whether enhanced sum, I would believe you're referring to enhanced retirement sum. So here, enhanced retirement sum is higher, it's double. When I say double, it means, okay, basic retirement sum, full retirement sum, enhanced retirement sum. If let's say this basic, right, currently, let's say is $1. Now, full retirement sum will be $2 times 2, okay? Enhanced retirement sum will be times 3. Okay, so that's the cap maximum. You can't go beyond that, right? So you can top up to the enhanced retirement sum. The good part of it is when you do that, right? When you do that, when the CPF Life kicks in, your payout more, right? Your payout will get more, right? So, in my opinion, if that is your retirement plan for a constant flow until for the whole entire life, right? After 65, then it's something to consider, right? Okay. So next question is, what kind of protections can I look at if I can't afford paying insurance premium? I think this is a good question. There are some I call it CPF. Well, it's not called, but actually it's CPF scheme. Most of us already have mandatory. We would have a MediShield Life in place to help us to cope with a certain medical bill. But of course, MediShield Life then promised able you to go for C class or B1 class, B2 class. Okay, B2 class meaning no fan. Got fan, no aircon, no TV, shared toilet, and no option of choosing your doctors because the hospital were then assigned. But with that, right, you have to lighten up. So that is one CPF scheme that's already in place, mandatory for all of us to be in, to help you, to help all of us, Singaporeans, for medical bill. Also, beyond that, we have dependence protection scheme, which is also by CPF, whereby it helps to protect against, you can use your CPF to pay for it, okay? You can use your ordinary account to pay for your dependence protection scheme, whereby if in the event, if I pass on, right, before the age of 65, currently there was some adjustment from 1st of April, it was actually cut off at 60 years old previously, right? From 1st of April, they actually increased it, right, to 65 years old. So the coverage now is up to 60 years old, 70,000. And then if I didn't remember wrongly, up to 65 years old, 55,000 instead of the original 46,000. So when something happens to me, you know, if I pass on, you know, during this period of time, then the dependents get paid out on that amount, up to 70,000, up to 55,000. Okay. So these are the few things that you can look at, right? And if you, as you gradually progresses in life, try to consider buying an insurance if possible, whatever that you think that is necessary and meets your need, and within the budget. So next question, some banks are offering multiplied accounts that pay higher interest rate. Is this a good way to invest? Okay, I think I'll reserve my comment on this. It is one way that you could get some interest, but it really depends on very subjective on whether, you know, the feature of the account and the tiers that you're able to hit. So are you able to read the return accordingly? So I think I will not comment too much on the product, right? Okay, so something that you have to look at your own in terms of your cash flows, in terms of whether you can hit that, the tiers that is promised to you with the interest. Okay, thank you for the question. Right, thank you. Now, next question is relying on CPF Life sufficient for my retirement expenses? I think this question builds on the previous question, right? So if you do a quick estimate, right, about 1,000 to 2,000, there about 1,000, slightly above 2,000, if you hit enhance, right? Retirement sum for that. So if your retirement expectation, the expenses that you entails, right, is something that you think that is something that the CPF Life are able to meet, then well and good, right? Otherwise, if you think that you just want to rely on CPF Life, then you've got to work within the payout amount, and perhaps exercise some discipline to scale back or or downsize a bit in terms of expectation. I think it's still, in my opinion, I think it's still manageable. Okay, for monthly expenses. But other than that, do consider building up a reserve as soon as early as possible, because it's better than none, right? Or less, right? So the next question says, do you think it's wise to invest in cryptocurrency? Cryptocurrency currently is not traded in FX in the stock exchange, right? And can you use the cryptocurrency currently to do some transactions, general transactions? I think it really depends on the merchant, whether they're accepting it or not. So, and also beyond that, these are very much private. Some companies, they came out with like some currencies and then build a network on it. So whether is it how regulated it is, how do you put a value to it is something that you would like to ask. Of course, you will say that some people making lots of money from the recent crypto fluctuation, but there are people who lose a lot of money during the fluctuation as well. So there are both two sides of the coin. So consider the risk involved, at least for the time being, right? Right. Thank you for the question. And then next question says here, you guys are always talking about saving more money, but my income is low. Are there better ways to grow my investment without saving too much? Okay, one saving that's already in our DNA is that so long as you're making an income, and then the contributing to CPF, you are actually also generating some form of saving. You're really building up a saving for your retirement. Well, CPF give me the discipline not to touch it unless under approved circumstances until I'm 55, and it helped me to set aside the money for my retirement going through the CPF Life. Okay, and I think it benefits me. Why? Because if put in my pocket, I'd likely to spend it. But because of that discipline that's set in place, it helps me to diligently set aside. And with that, right, it grows its interest. Of course, that said, how liquid it is, of course, there are some approved circumstances you can use it. But if you talk about just saving part, I think that's one form of saving. You have to start somewhere. It doesn't mean that you really have to save every cent, but start small. If you could manage small, then talk, gradually as you build on your career, your incomes comes in, and then you probably could manage a bigger sum. A lot of people think that a small amount, cannot start somewhere, right? Start somewhere. I've seen that in my parents who have to bring all of us up with the meager income that they have. All right, they managed to save up. They managed to feed all of us and bring us up. I wonder if very much, the kind of mindset they have that is to manage the money, because there is a need to feed the family. So so I hope that is a good consideration. Start small. Don't need to go big. Start small. Gradually build on it. Okay. Thank you for the question. I have some spare cash. Is it a good idea to pay off my CPF loan to reduce the accrued CPF interest that I need to refund? in my opinion, I would do it. Why? Because CPF is paying 2.5%, right? 2.5%. And CPF loan is attracting 2.6%. So with 2.5%, right, unless my spare cash can attract more interest than that, otherwise, I'm shortchanging myself. Opportunity lost. Why? Because I'm holding on the cash and expanding the 2.6% that I'm foregoing. That goes into the house. And if I sell it, I need to put it back there, right? So it's still my money, but it's 2.6% that I would, rather preserved. Okay. So that's for the question. I hope that answers the question. And then finally, I have this one that says, I am still studying. Is it necessary to make sure I am financially fit at this moment? Certainly so, of course, right? And that's why there is so much talks about what? About starting young, starting early, and their parents who are teaching the children how to manage money. It's never too early, right? Start where you are, because why? That habit form will carry you through a long time. And with that, right, you would learn how to manage the money better, and then, be able to plan your financial plan better, and then move towards what? Move towards your financial goal. So start early, right? Okay. So I hope that answers the questions. I hope I'm not going too fast, am I? Okay, let's wait for the next question. Okay, let's wait for the next question. Okay. Okay, I think my colleagues are consolidating them. No worries. If let's say if the question is flow in because of internet issues, right? Be rest assured we will address all of them. All right, your question is important to us because that's where we could share with you our thoughts and principle and concept about financial literacy. So those questions will actually flow into some of the touch points that we can have with you. Later, I will share with you all the links where the platforms that you could find us, on that. Okay, I've got a message from my colleague that they are facing some technical issues. It's not flowing through, but don't worry, okay? They are communicating with me, right? They have put to me that can I choose to later. Dependence protection scheme. You can't choose. You will be automatically in it at 21. If I'm not wrong, it's at 21 years old, right? But you will last you through until 65 currently, until 65. And so of course you can opt out, right? It's not something that I want to, I participate. I don't want to, I don't. You can opt out. But when you want to opt in back, they will then assess you to see whether they are prepared to underwrite your conditions, if there's any. So it's very different, okay? Well, trying to get in again, subsequently may have a bit of difficulty, okay? So I hope I answered that question, right? So it's part of CPF scheme. Next question, how do I decide which investment app is better? How to know if they are safe? Remember, we talk about keeping your money safe, all right? So some of the apps, right, some of the companies, are they registered with MAS? You can go to MAS website and check all these companies to make sure they are registered. Doesn't mean they're registered, you will have no issues, okay? There are some registered companies that has gone not very well, all right? Went into watch lists and stuff, things like that. But at least they're under the framework, a regulatory framework of MAS, to comply with certain ethical behavior or professional or corporate behavior, governance, all right? To start off with, all right? Okay. So I hope. Okay, so I hope that helped you to answer some of the questions. So check on that as one thing. And the other one, of course, the track record of the company. If it is offshore, certainly unlikely you'll be regulated by MAS, right? So that's one place to start off with. Okay. And then how often must I do financial health check? I think I've answered that question, so I'll leave that. Okay. Am I really bad at I am really bad at keeping track of expenses. Any suggestions to help? Technology. Here I think you can visit our website, AFL website. We do have some templates to start off with. If you're not very comfortable in writing paper, in record, you could then use an Excel sheet that is provided by AFL website. So go there, download some of this worksheet that you can, and then in there, it will actually classify for you the fixed expenses and the variable expenses. And then you could then take account slowly. Well, as a warm-up, let's start from there. And when you're gradually more comfortable, you think that you want to form your own Excel sheet, or you want to move beyond that, have explore some apps, why not? Look at My Money Sense, right? It is an app, a platform whereby later I'll give you the link, whereby whereby you can really, where it's a platform, it's like a dashboard whereby your CPF balances, your HDB loans, your income tax, it's a one-stop where you can see all this. And with your permission and consent, right, you can actually bring in your banking banking details as well, so that you can have a more holistic platform to look at and do your planning for financial tracking as well. Yeah. Okay. Right. So that answers the question. I will take the last question here. Okay. The last question here says, I'm really bad at track of expenses. Okay. Right. So sorry, that will actually be the last question because of timing issue. Okay. But don't worry. Now, even if, let's say, you're really bad at it, start saving. Start simple. What you do is that you take your income, you need to build up some resources, right, for part of the financial plan. Start with saving. Start with saving, right? Decide something that realistic and achievable, and then put it there, and then put it aside as saving and manage within, spend within your means, right? Okay, so good, right? So I think that will be our last question. Keep the question coming. We will address it in our next platform that I'm going to introduce to you. So here I will then bring you back to my slides that I'm going to show tonight. Okay. Thank you once again for staying back, and then going through this together. Right. So next one, as I promised you, right, if you have any questions that's unanswered, okay, don't worry, all right, we will put them into our finlearn.com website. It's a communal platform that you could put your question, even if you didn't ask it tonight. Don't worry, go there, all right, register and put your question there. The purpose is so much that, the community itself will start to contribute their comment, give some of their answers, and then you could consider and learn together, right? So that's one. Second, right, you can also come and visit us in our public sessions, right? Do scan in the QR code, right? Or visit us at the the hyperlink that's shown there. Okay. So what we do is that we do conduct classes. We do conduct workshops, talks at public libraries, and beyond that, at our own avenue. But of course, now we go to Zoom, right? Exploring programs, giving you programs, workshops, something like that for financial literacy that covers from cradle to grave, right? Go there and look at it. Very, very extensive coverage there. Okay. So next, this is our website. So please visit, like, follow us. Okay. So these are the different platforms that you could explore. As I've also suggested that, maybe you can consider My Money Sense app. Okay, over here it is explained. Now, Money Sense Singapore, it's a website whereby you find lots of articles there. My Money Sense app is actually an app. You need to log in with using your SingPass. scam alert to safeguard your money, you go there, look at it. Some of this warning as modern or so latest trend of scamming as things that's happening. Look at that. No, anti-scam, call that number. If you're not sure of certain things that looks a bit fishy, call that number and check it out and find out more, right? Okay. Okay, I'll just rest here for a while for you to copy down some of these details. Okay. All right. Okay. Okay, good. Right. The next thing, all right, I'm going to hope to have another appointment with you, not by me, but by my colleague. Okay. Here we're going to talk in a month's time from now, which is 26th of October. You put it in your diary, put it in your app, or wherever way, 7:30 Tuesday, okay? At the same place, Facebook. You're going to see us again, but now we're going to bring you another topic, right, on have you borrowed too much? How do we know? You know, then if I am borrowing too much, what should I do? Is there something that I should look into? Something that I could manage? And if I'm really in debt, what are the help that I can look to? What are the measures I should take? Right, so I invite you, please come and pop by like this, spend the easy, cool evening together after your dinner, right, and discuss the topic together with us. All right. So I'll rest here for a while and let you scan in and then do the booking on your diary. All right. Okay. Interesting topic, particularly so when someone asks me about property, right? I think most of us would need loan, right? So this topic perhaps will attract some attention as well on that aspect. Yeah. So good to find out more. Okay. Okay. Good. Okay. So ladies and gentlemen, once again, I thank you for your participation. All right. So hope to see you on the 26th of October. All right. Okay. 7:30, same time. All right. See you. Bye-bye.